So Melissa, I'd just like to hear your thoughts. I mean, you have invested in US, you've invested in Asia, in China, and now also in Southeast Asia and Israel. And you've been through all the previous crises, you know, the dot-com crash, post-September 11, the nuclear winter of VC. So can you calibrate for us today what you're seeing today in the COVID situation in the US and also in Asia here? How does that compare to say the the dot-com era or the post-September 11 era where all the IPO markets were shut and the VC was just going to nuclear winter? Yeah. Any thoughts?
Doris, thank you very much for having me on the panel. And yes, I'm virtually in Singapore. I've been using the Singapore background for all my panels over the last couple of weeks as I remain in the US until I can come back to Singapore. It's a very interesting question. I joined Vantage Point Venture Partners in December of 2000. So I went through the 2001 cycle. And first of all, to begin with, no one ever expected a global pandemic of this magnitude, but we have to deal with what we have in front of us. I think, I divide the US reaction in the venture market really into three categories. Those of us that went through the 2001 down cycle after September 11th, and those firms that went through it, firms that went through 2008, and then firms who have never been through a down cycle. And I would say all of the firms that were around in 2001 and lived through what was the nuclear winter of venture capital at that point in time when capital absolutely just dried up across the world. I think most of the firms are reacting the same way, which is they're working extremely closely with the portfolio companies to work on budgets and cash flow, renegotiating leases, renegotiating with Amazon for web services, doing cuts where cuts absolutely necessary. Most of the companies we see have cut their budgets somewhere between 20 and 50%, their operational budgets, and are thinking about how do I survive for the next 24 months and really make sure I have a relevant product in a post-COVID world. I think that that's one reaction. The second then being firms that really were through 2008, and I think they actually have a much more V-shaped recovery hope. And then I think there's firms that are just very new, who have never been through a venture downturn and just somewhat are ignoring some of the economic signs, especially in the US, where it's easy to get confused by, the stock market essentially being where it was in October of November. And yet the economic numbers are, we haven't seen these types of numbers since the Great Depression. So we do manage a global portfolio. We have 1/3 in Israel, 1/3 in Asia, that's Southeast Asia, and then 1/3 in the US. And I would say that most of our companies have responded by cutting budgets, focusing on the product. We're there to help them. And I think from our perspective, we're making sure our companies have 24 months worth of cash. We do not see this as a situation that's going to dissipate quickly. We see this as a period of time for companies to focus on unit economics and to be very conservative on cash burn. And I think regardless where you are in the world, yes, maybe there's a false front at the moment. I've heard out of China, things are recovering, but if the US doesn't recover, those factories have no place to ship goods to. So I think we're much more interlinked than we think we are and once were. I also believe that most of the VCs are looking at triaging their portfolios, meaning those that, they're going to have to let go some of the companies that may just not make it through this, and then focus, I think, where most people are today who are done triaging their portfolios. They're thinking about what's next, and they're looking at new market segments and really thinking about the future. I just want to comment on fundraising for 1 second among the portfolio company. Just in general in the US, it's bipolar. We're seeing some very large, expensive A rounds still get done, but we're starting to see some pretty significant down rounds in the late stage companies. But I would say it's still too early to tell.
Okay. So are you doing new deals?
We have started, we are done, the portfolio is in good shape, but everybody's funded through 2021 right now. And we are starting to focus on looking at new investments, the bar is extremely high, but we're not afraid to pull the trigger in the market environment. We're just thinking the bar is just extremely high, at the moment, like it is for everyone else.